Welcome back, traders. As you will see, I am sporting a little bit of a tan. I was relaxing last week on the beach in Mexico, as many of you will know. But fear not, I am back with a weekly forecast to get you prepared for the stock market next week. Now, we've got lots to go through because I haven't talked to you for a little while. So we're going to start, as we always do, with a top-down analysis on the S&P Futures Chart. I will go all the way from a weekly down to an hourly and possibly even a 10-minute chart. We will look at all the possible catalysts coming up this week in news events and big political events which are going on currently around the world. And I will, of course, be looking at all the other pairs, looking at the NQ, looking at the DXY, and of course the VIX. So I've got you covered in this video. Do not go anywhere. This video will really help you make profits next week. If you haven't already, so many of you watch these videos and do not subscribe. So do me a favor, hit the like button underneath this, hit the subscribe button so you can be tuned and ready for every time I drop a new video. And don't forget, this week is your last week to get funded with Apex with the 80% sale and a 1-day pass. Last chance you have to do that. I will drop the link underneath the video. Use my link and my code. It will always get you the best possible discount, and as of this week it's 80% with a 1-day pass, so you can get up to 20 accounts. Enough talking though, let's do the business, shall we? Jumping over into the charts. As always then, starting off in a weekly view. Now, very simply, let's just zoom out here so we can start off thinking about where we're at. This has been a absolutely monstrous move since this October low of 2022. And then we had, of course, the October pivot in 2023, and ever since then we have just pumped to new highs. Now we are starting to hit targets, which I'm going to get into shortly. But just from a weekly count, what do we have here? We had 2 weeks of consolidation, all right? We had this first week of an indecision candle, then we had an inside bar on the weekly before this expansion up. Now that expansion up came from the Fed. It came from the FOMC meeting on Wednesday, which is interesting because we had kind of hot prints on CPI and PPI the week before. We were all very aware that it was almost impossible for the Fed to do a rate cut. What we are looking at is higher for longer. So the talk was not particularly dovish. We do think we're going to get cuts later on the year, but really we're going to have to see how the economy adjusts, especially given the news coming out of the US Senate this week, passing another bill for even further borrowing. So more debt for longer does not equal lower rates. So you've got to be aware of the macroeconomics going on right now. But from a technical point of view, very clearly, weekly flag, weekly breakout. A nice breakout and a close in the top third of this candle on the weekly. Okay, so not much pullback, not much relief for short. So it's unclear on a weekly if we have any trapped inventory up above. But definitely from a weekly point of view, we are still very much in an uptrend. Now, one thing I want to look at in the weekly here is the Fibs. Now, we have gone over this week after week after week, talking about a giant cup and handle, which we saw. So here is the cup, here is the handle, and from here we are looking for the expansion. And this week we hit the target, and I will show you right here. If we think about this leg from here to here, all right, that is leg 1. Here is your pullback for the handle, and you will see we hit the 100% mark. Okay, so we have just gone slightly through it and pull back in. So we've taken away any inventory above. Everyone's sold into this push. Okay, anyone smart money, they were buying down here in this handle, in these dips for the expansion, the 100% move, and that has now been finalized, right? So there's no more instant upside that we can look for in terms of this cup and handle, unless it's going to do a giant move and we're going to start attacking this 161. Very, very possible, but that is a move to look for over a number of months, okay? But for now, we have hit the primary target, and that's something you must be aware of. From here, let's dial down into a daily chart. So again, on a daily chart, just like the weekly, it's following the weekly. We have a series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows before we got the FOMC expansion on Wednesday, breaking out of the previous all-time highs and now basing above. And that is the key thing here. We are basing above all-time highs. Now, we have not back tested those levels yet. So this whole area of consolidation right in here, or accumulation, whatever you want to call it, we have not come back and back tested this to make sure the base is strong. So that is something I am possibly expecting to happen this week, and I can build thesis for that in that we have hit those targets on the weekly on the fib, and we do have a hammer or a rejection candle right here, or a doji, whatever you want to call it. That is the first sign of a rejection candle, and Friday we closed level. Now there are gaps underneath it which we can fill. You can see one here on the daily, and I will go into more of these on the 4 hour. So I am expecting, even if remaining bullish, us to possibly come and check out this imbalance right here. Check the base is strong before a possible move up. If that base isn't strong, then we can reassess. Are we going to just fade back into range? Do we use this liquidity later on next week or the week after? Time will tell. For now, we are just building out thesis and key areas that we want to look at. As ever, on a daily, I want to look at our positioning on the Bollinger Bands and the 5-day and the 20-day. So let's do that right now. So here we have the Bollinger Bands then. So if you don't understand how I use the Bollinger Bands, you can check out this video in the top right hand corner of the screen. It will teach you how I use these to understand potential targets, where we might have mean reversions, and when we will get possible fades on the market. So if you watch that video, you will understand that I like to use the top Bollinger Band, which is a 2 standard deviation away from this purple line, which is the 20-day SMA. And this is often a place where the market will get stuck. And once it gets stuck up here, it will want to check the 5-day SMA, which is this blue line, and then possibly a deeper pullback to this purple line, the 20-day SMA. So you will see time and time again, we have done that. We have trended up to the top Bollinger, pulled back to the 20, up to the top Bollinger, back to the 5, top Bollinger, 5, top Bollinger, 20, and after that mean reversion we had in the last 2 weeks, where we had many inside bars, building liquidity and building stops, we continuously held the 20-day SMA. It is an extremely bullish sign, okay? This means this is fair value, this is good price. Buyers have acceptance in the market at this price, and we are expecting expansion to retest the 5-day and through that the top Bollinger, and that's exactly what we got. So on the Fed day, you will notice the low is the 5-day SMA, and the day before the low was the 20-day. So we held the 20-day, we held the 5-day, and we expanded up and through the top Bollinger. Now that is extremely rare that we are able to base above the top Bollinger Band. I will show you time and time again. Very rare we will base above, okay? It always wants to come back down inside every time. And the same below. It's very rare you will get a base below. It will like to do a mean reversion. Which means on Thursday, once we have this possible rejection candle, it is likely that we will need to trade back down and at least wait for the Bollinger to expand above. Okay, remember it is 2 sigmas or 2 standard deviation above the 20-day. So as the 20-day trends up, the Bollinger will trend back up. So you can now see we have a close below the top Bollinger. So a few things can happen here, can't it? We can hold here, all right, and we can start to build out liquidity in this zone, wait for this Bollinger Band to be above and then expand back up. Or alternatively, we can look to retest this 5-day, which would be probably somewhere in this giant imbalance on a daily and towards this breakout retest area, which is a trade I'm looking for because I know there will be a lot of buyers waiting here. And it is from that point, if we get failure, we can expect a test of this 20-day, a deeper move. Everyone who is looking bearish on the market, I warned you, until you get a very clear 5-day, 20-day cross, you will just get continuation of trend higher, okay? And that's what we had. We have not had a cross since this early January, and it was very short-lived before we scooped back up, all right? And you all have to go back a very, very long way now. We're into last year. So you have to be aware of that. Do not be looking to fade the market and holding puts and expecting the top to be in the market until it gives a reason to sell. And that would be a catalyst and a technical setup to follow. Until then, you need to follow trend. You need to be looking for areas of value. So again, from a daily point of view, we are very much in an uptrend. So the key pivot on the daily for me is still all the way down here, really 51.25, and possibly a soft pivot here, 51.70 you might as well call it. Until then, you need to expect the market to be able to continue to put in a series of higher lows and higher highs. It is not until it starts to fade some of these levels and stay heavy, okay, where you can expect an actual downside move and a move to a bearish market, not a pullback, which is what we are seeing every time someone is trying to fade it at the moment. It is nothing more than a higher time frame pullback. Moving on now from the daily, let's have a look at the 1 hour and 4 hour charts. Into the 4 hour chart then, and the reason I'm showing you this is I want you to be aware of the previous high and the imbalance that we have on the daily. So here is your old high, which we are yet to retest. This is your FOMC candle where we bust straight through it and never look back. And now we are having some form of retracement, okay? Now, there are lots of ways we can think about this in terms of fibs and pullbacks, but really I am interested in a retest of this area here of the 5-day and in between the 5-day and 20-day, and then I'm going to wait to see where buyers want to be involved. We still have gaps down here which can be filled, and of course this giant gap down here, which is what I was talking about earlier, where this blue level, this is demand. If we start failing that, we have a very, very sharp move down because there is not much structure underneath. Moving away from the regular trading hours into the extended now, just so I can show you a little bit more of what I'm looking at. So you can see this flat top here. This is where we build the liquidity. It was a bit of an A, B, C, D type pattern, or a squeeze pattern, A to B, and then squeeze out into C before an expansion higher. So if we want to think about that in terms of a fib, if we're just going to go from this high to this low right here, you can see again we have hit the 161. So everything coming into confluence in terms of the fibs, all right? From a 4 hour standpoint, any buyer in here who is playing that breakout, that squeeze pattern, has got their 1618. And anyone who was long-term swing off the cup and handle we looked at in the weekly has hit that 100% move as well. So you have to be thinking there might be some profit taking, which is what we're starting to see here. Now that doesn't mean you should be full in, full port short, okay? Because quite clearly we can build a flag here, profit take to here, and expand higher, okay? The other thing you need to think about is this giant imbalance. It is very, very probable that we will at least fill some of this in, if not all of it, and retest the FOMC area. Like I said, the move off FOMC was extremely expansive, running all stops to the highs without too much dovish talk, because you've got to think now we are going to be waiting again, okay, again for June, July prints. Now we do have some news coming this week, and if these come in hot, it's just adding fuel to the fire that this whole move up here was a rather large stop run and can't be sustained, and that will be more present when we get into looking at the Dixie a little bit later. Moving from the 4 hour now down to the 1 hour. Much like the 4 hour then, it's just easier to present this choppiness, this huge range here. So this range here is something I am expecting the market to want to come back to and backtest, just like I talked about on the 4 hour. So I'm expecting some type of move down here and to see if we get buyers step up for a rotation to retest this high, or if buyers in fact fail and we come fluttering down straight through it, and then we've got this gap and we have to think about how we react there. Now, will this all happen in 1 week? Probably not. We're looking at a rather big move there, almost 200 points. But never say never, because this move in here happened very quick without much structure. It won't take much to get us right the way back to that 52.20 level, and that is a key level, as I talked about earlier. I want to move away now from the ES or the S&P and have a look at the NQ. So starting off in the daily on the NQ, and you will see it has been far more fluid between the Bollinger Bands, although respecting them as well, trading from the top to the 5-day to the 20-day to the lower Bollinger and all the way back, and it is a rinse and repeat before we had this massive amount of consolidation or flag here on a daily, squeezing from the lower Bollinger Band. We had the 5-day cross under the 20. It was a trap. Nothing confirmed as we closed right back above, and then again FOMC day, huge expansion, ran all the stops through the top Bollinger before rejecting after taking the liquidity of the previous all-time highs. That is key. It took the liquidity, it ran the stops, allowed buyers to get out into that liquidity. Breakout buyers got trapped in. They took the short, the smart money on the reversal, and now we're having to see what we do. Are we going to trend back down into safety on the 5-day and the 20-day? It is a very similar scenario to how we talked about on the ES, except you will see, as I've talked about, tech has been leading this charge, okay? Tech is the leader in this market. So if NQ is going to show relative weakness, it is going to be the easier market to take short. And the same when it's showing relative strength, it is going to move faster and quicker than the ES because it is the Mag 7 driving all this news. So you have to be aware of the bigger headlines when it comes to the Mag 7. They are what's moving this market right now. Moving away from the NQ, let's have a quick look at the dollar. Into the dollar then, or the DXY, and I've not adjusted these drawings from the last 2 or 3 videos we've done when we look at these. Now you will see quite clearly the dollar is doing an inverse head and shoulders, a very bullish move. There is your head, there's your left shoulder, and there is the right shoulder. Okay, very bullish. And we are now looking to come and retest this area of supply where we also have a giant imbalance on the daily. Okay, so when the dollar is showing strength like this, it is often a time when the market will start to go risk off. So when you start to think about the thesis I'm building here, we've hit the 100% move on the weekly for the ES. NQ took all-time highs and then ducked back inside. We have taken out all-time highs on the ES, ducked back inside, and any short-term long traders who were long, say the last week or 2 weeks, they have also hit their 161 target. So we're starting to build thesis that we might get some profit taking. Yes, we are still in higher highs and higher lows on the markets, on the ES and on the NQ, but you can also argue here we have swept underneath, taken the liquidity, turned right back inside, and this is an extremely bullish pattern now on the DXY. So if they really want to push up into these levels, it is highly likely that the rest of the markets will go risk off. They run inverse to this and you can expect some profit taking. So you've got to keep one eye on the DXY this week. Let's see, is it able to sustain a push and base above this old high here? All right, and then look to trend higher. Anything giving an inclination like that, I will be looking for shorts on the market, okay? I will be looking for shorts, or at least I will not be looking for longs. I will at least be risk off and let the market settle down. The other thing we can look at for confluence with this, as always, is the VIX. Into a daily chart on the VIX then, and you will see yet again I've not changed these drawings because there is no need. The same levels are playing out time and time again. So we can have the bottom right here as a potential demand block which has held up. All right, we had this giant bear flag, we were trying to curl, trying to trend, we had these imbalances which I kept talking about, and I kept preaching to you, we need to see a sustained rally on the VIX above 15, a base and hold, for any market to show weakness, and we haven't had that. Look, every time we came up to these key areas of 15, 15.50, we rejected, right? This top level here, we keep wicking through rejection, and finally FOMC came and we snapped through the bottom of this bear flag before finding support near the lows. Now the reason we're going to find support there, these are near all-time lows, right? This is not just a one-off scenario. It is very hard for the market to get down into these single digit prints on the VIX. If we get there, we're going to keep trending higher, believe me. But if we show a willingness now to possibly sweep maybe a little bit more liquidity or just bounce from this position here, come back inside and try and trend up, that will line up absolutely perfectly with what I've just talked about on the Dixie to make that move lower on the ES and the NQ. So we've got to be watching all these things. I'm not saying I'm going to take a short on the market. I'm giving you thesis that if these things play out, that's what I'm going to be looking for. Until then, I'm looking for pullbacks to get long in the market, just to make that very, very clear. What are the other things we need to consider? The other massive things we need to consider this week are news events. So let's start off with the economic calendar. So news incoming this week then. As always, a pretty packed week full of news. You need to be careful this week. There are some Fed speakers, including Jerome Powell. So just keep your eyes on that. So we have Goebel, we have Lisa Cook speaking, we have durable goods, we have consumer confidence, Waller speaking on Wednesday. Other than that, a clear day on Wednesday. And then we have big news here. This is the one I'm looking at. Initial jobless claims. I want to see, does that come in hot and add fuel for my thesis for a potential short? And the PMI and home sales and consumer confidence. And then into Friday, where we have wholesale inventory. And this is the key one again, PCE data an hour before the market open. So those are big news events this week. But the other thing you need to keep your eye on is what is going on in Russia right now. So if you didn't see, there was an attack at a concert in Russia just outside of Moscow over the weekend or Friday night, leaving more than 100 people dead and many more people injured. Now, so far, what we have seen is America saying they had intelligence on this that they shared with Russia some time ago, a number of weeks ago, which Putin apparently dismissed. Whether that intelligence was correct or not, we do not know. There has been news coming out that this is down to ISIS, but there is absolutely no comment at the time of me making this video from Putin that it was ISIS, okay? And you have lots of different things that can play out here. Was it really ISIS, or is there a bigger picture play going on here? You need to be aware of that, because any form of retaliation from Russia against any form of ally will cause a huge risk-off event. In fact, I would go as far to say any big form of retaliation at all will be world-moving, because many parts of the world will be very, very fearful of what will happen next. If we have that, do not be surprised to see the market pull very quickly. Even if it's for a number of minutes, it can be an overreaction. So you must be careful this week. You must be using hard stops. You must understand where liquidity is. Now, my team, the group in my room that run my system, understand where liquidity is, and they had a really, really nice week. We had a very nice longs here off FOMC before some profit taking, and a very clear system to understand what we were looking for on the way down. The market gave great opportunities over the last week, but it's my belief that next week will be even better. If you are struggling in this market, if you don't have a system, a playbook, if you are unable to understand or unlock multi-time frame analysis to give you an edge in the market, I advise you to take my course. There is still a sale on right now using the code YouTube. It will get you 20% off. You just have to hit up www.flowzonetrader.com and use the code YouTube. I'm going to pop it underneath so you can grab it right now. It's a 20-hour course. It will also allow you entry into my Discord for life. You'll get all of that for just $399. Take your time this week, all right? Trade safe, let the market settle down, let it show you where the liquidity is, what the trend is. Good luck, and I'll see you later on in the week.